Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into Sila Realty Trust's latest quarterly report. Get ready to learn if this real estate company is building profits or just castles in the air. Spoiler, interest rate swaps get a little wild. If this sounds like your cup of tea, then buckle up because this is about to get interesting. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Feel free to join. This report covers Sila Realty Trust's performance up to March of 2025. It's a snapshot of how they did in the first 3 months of the year. Quick background, Sila is a real estate investment trust, or REIT. They focus on healthcare facilities, hoping for stable and growing income. Think medical offices, rehab centers, that kind of thing. Their stock trades on the New York Stock Exchange under the ticker Sila. Let's jump right into the numbers that matter. First up, the balance sheet, which gives a glimpse of what the company owns and owes. As of March, Sila's land holdings are valued at 160 times $7 million. Their buildings and improvements after considering depreciation come out to 1.526 billion depreciation, come out to $1.56 billion. They have about $5.5 million in cash, and on the other side of the ledger, their debts are considerable. Their credit facility, which is basically a business line of credit, stands at $554, $1 million, don't worry about the deferred financing cost. That just means some upfront fees they paid for the loan that are being accounted for over time. The total liabilities add up to $633 their operations. Now let's look at the income statement, which summarizes how profitable they were this past quarter. Sila brought in $48.3 million in rental revenue. Not too shabby. But running those properties costs money. Their rental expenses were $633 million. General and administrative expenses, which are all the behind the scenes stuff like management and office costs, came in at $5.7 million. And depreciation and amortization, which is how they account for the wearing out of their buildings and equipment, totaled $17.8 million. They also had a $3.5 million hit from impairment losses, which is when an asset is worth less than it's carried on the books. Taking all of that into account, Sila's net income ended up at $79 million, or dialed on a 14 per share. The cash flow statement shows how cash moved in and out of the company during the quarter. It's divided into 3 main parts: operations, investing, and financing. From their core operations, they generated $24.1 million in cash. That's from things like collecting rent and paying the bills. On the investing side, they spent $35.3 million on investments in real estate. And then on the financing side, they had proceeds from their credit facility, but also paid out distributions to shareholders, netting out to $2.5 million. Important to notice that these reports often contain a few small but unusual line items that might otherwise be overlooked. This report had a loss on extinguishment of debt line, which shows that they did some refinancing. More specifically, they did new credit agreements. Now let's turn to the notes, because this is where the report gets interesting. Notes are where a company has to explain all the details and rules they followed to get to the numbers. This is really where you see the true picture of what's happening. Sila Realty Trust is set up as a REIT, which means they have to follow specific rules. To stay qualified, they have to give out at least 90% of their taxable income to shareholders. If they mess that up, they could get hit with some major taxes. Here's a risk to note: 16% of Sila's rental income comes from leases controlled by Post-Acute Medical LLC. That's a big chunk. So if anything happens to that tenant, it could sting Sila. A tenant called Steward Healthcare filed for bankruptcy, and Sila had to take a $3.5 million loss on a property because of it, the Stoughton Healthcare facility. Another tenant, Genesis Care, filed for bankruptcy last year, but they are now working it out after Genesis Care emerged from bankruptcy. Sila received $2 million as a severance fee, and they're recognizing that income bit by bit over the lease term. Sila uses a credit facility, meaning line of credit, to fund operations and acquisitions. Basically, it's their business credit card. They've recently finalized a new agreement with Bank of America for up to $600 million, with the potential to go up to $1.5 billion. To put all this together, Sila is swapping some variable rate loans with fixed loans for stability. This led to a loss of $233,000, but it's a move to protect against fluctuating interest rates. Speaking of interest rates, this report notes that a lot of their debt is effectively fixed through what are called interest rate swaps. This protects them if interest rates jump up, but if the opposite happens and rates fall, they might not benefit as much. Also, there could be a risk that the other party in those swap contracts defaults. The company uses stock to pay some of its people. They've set aside 2.25 million shares for this purpose. They recently granted some awards that will vest over time, and the future cost of those awards is estimated at $2.5 million, and another performance-based awards for $2.43 million. Sila is committed to providing funds to tenants for improvements, and they've also committed to provide funds for some mezzanine loans. This is worth keeping an eye on because it highlights future cash obligations. This report also assures investors that there's been no funny business with insider trading, at least according to this report. Alright, let's put all this information together. Sila Realty Trust had a mixed quarter. Rental revenue was down a bit and they had to take a loss on one property. On the flip side, they're managing their debt by using interest rate swaps and they've refinanced their credit facility, which should give them more flexibility. Cash from operations is also down quite a bit. What do I think? They're playing it safe to manage interest rate risks. Likewise, overall, it looks like Sila is going in a reasonable direction, but they are not having huge profit gains. Sila does have some challenges ahead. Those tenant bankruptcies are a reminder of how important it is to have a diverse and stable tenant base. The high concentration with one tenant is also worth watching carefully. Alright, that's our breakdown of Sila Realty Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where we discuss these filings in real time. Thanks for watching. See you next time.